Hi everybody, welcome to the Baguette Investor channel for a new video. As every single Monday, weekly review. This week I'm a little late because I procrastinated a little bit this morning, but it's not really a problem. Nothing really interesting in terms of profits as always. We are still in very, very boring markets. There is nothing to do at the moment except for gold. Uh, Pretty much every other asset class is being either bearish or neutral. I'm going to show you an argument, my point, showing you crypto stocks and different kind of asset classes to show you that just there is a moment to go hard on the markets and to invest a lot of money, and there is a moment to stay out and be peaceful and just not put yourself at too much risk when the odds are not with you. You can see since the start of the year, my portfolio is down 1.5%, which I already explained in the last videos. 1.5% is nothing. If you make a positive trade, you make that you make that back in one trade in good market conditions, and until the market conditions improve, there is no reason to go hard on any trade and just keep very, very light on your positions. So, first thing I want everybody to look at is commodity indexes, because the big question for the next year is inflation going to be transitory, or is inflation here to stay? And that is going to be driven by commodity prices. So we see different kinds of commodities that started going down again, and we see commodity prices like oil prices and some metal prices that keep going up. So I'm really paying attention to this market because for the last 10 years, we've been in a bear market for commodities, and a bull market for commodities, an inflation cycle would completely change the cycle we were in. The most important part of this would be the end of growth stocks becoming the leaders in the markets, and the switch from growth stocks to value stocks. So this is something I'm really paying attention to, but this is more long term, and this has nothing to do with the week. There are commodities that are very interesting assets. So how do you trade commodities? You can trade the spot by buying ETFs, by buying futures, or you can trade the related stocks. For example, if you see the price of oil increasing, you are trying to buy oil producers that will profit from this oil bull market. If you see the price of copper going up, you're going to buy copper miners, people that transform copper, or firms that add a lot of value to copper and can get the price back on their customers. If you see agricultural commodities, you are going to try to buy farms and things like that. That's what you are looking at for commodities. The biggest commodities in the world is gold, and you can see that it's in a very beautiful position. Gold has not looked this beautiful since, we would say, 2007, 2005, almost. We had a massive bull market on gold from between 72, 74, between 76, 80, and between 01 and 12. Are we going to see another bull market for gold? A bull market for gold means inflation would be back, and we're starting to see inflation. Rumors that inflation is going to be mainstream and not transitory. I have a few lines right there that are not really interesting. What I'm mostly looking at was this price compression, this volatility compression. It's very interesting as a chart person. When volatility starts to contract, it's usually the time where price is going to burst into one direction. If the market conditions are favorable, a breakout in one direction gives you a very good idea of how the price is going to behave. During unfavorable market conditions, you have this kind of pattern like this all the time, and it can go into more rangy. While in very directional markets, like you saw, I'm going to give you an idea of what a directional market is. During these kind of markets where the price action is very strong, you can buy the breakouts with very little fear. They usually end up being very, very strong. Otherwise, in range markets, like you see, for example, right there, you're going to try to find a breakout either up or down, and you're going to have much more volatility on the trade. But right now, we're seeing some moves on the monthly, which is no joke. When you have signals on the monthly on any asset class, it's very, very, very important. So you have this little base right there that is cleared, that is being cleared because the month is not still over. There's still 7 days. You have this big level right there. Of course, I'm looking at the price in US dollars. And after that, we're going to have the all-time high. But if we start to go to the all-time high, I think this will be the start of a new impulsive movement. I already spoke about gold last week, and I will keep mentioning it as long as it's an asset class that matters. Because with gold going up, you are going to have all the gold miner stocks that will go with it. You are going to have other precious metals that might start to go up because it will create maybe a sectorial trend, like maybe silver is going to start following gold, and you have platinum going to start following gold. You need to keep your eyes on every single asset in one sector. For example, if you see one company from, I don't know, casinos start going up, Stein Weinstein in his book tells that you should look at other casino stocks, that if you see sector strength, it gives you another signal that there are people buying these kind of assets. And what would gold going up would mean people are buying precious metals, and we need to look at what's happening. There is also US oil that is really, really interesting. We're reaching these 2014 levels. Of course, if you want to trade oil, I don't know how to trade these markets. I don't know how to trade volatility like this. I'm really bad at trading volatile markets. It's just not my kind of trading, so I don't have anything to say, except I'm not watching oil directly. I'm watching oil stocks. For example, I made a first trade on oil. I bought this pattern right there, bought here and closed there when the daily trend stopped, and after that didn't find any place to enter again. I could have maybe started back something over here, and I thought about doing something over here, but it's not a setup that I master, so I try to stick only to the setups that I perfectly master and that I'm very comfortable with. Where are my interest rates? They're somewhere around there. Where are my interest rates? Where did I put it? Did I hide the interest rate? Oh, maybe yes, I had the interest rates. You have the US interest rate. I'm going to add it again to my list right now. The US interest rate is now at hovering around 2% when during the COVID crash it was at 0.5, so the interest rates rose quite a bit. The question is always during this market period, we are in a very long-term bearish trend for interest rates. So it's not going to be, it's not going to change in 1 week. It's going to change in a few years. And if we're entering a long-term inflation and central banks and markets decide that it's here to stay, well, interest rates are going to rise, and we're going to see something that has happened in the past. Maybe I can get longer history here. There you go. If you look at the short term, people always look at the short term charts. For example, some people might look at the interest rates from since the 2000s, but if you look at the very long term, you can see that this looks like a cycle. In between post-World War II and at the top of 81, when the Federal Reserve tried to cancel and to fight inflation, interest rates have made a beautiful cycle. And the question is maybe we are entering a new cycle, and in the next years, as we will get older, we will see new inflation or like that, I don't know. But look at the long term and see that, yeah, a return of inflation is absolutely possible. And you need to look at the US 10-year. There is not updated. It's only December 21. So in order to get the real-time data, we need to look at this one. And this one has updated data. You can see it's hovering between 1.9 and 2. So with interest rates going up, it means that bonds go down in the short term. If you're a bondholder, you usually don't really look at short term. What I'm seeing, however, for bonds is a very interesting thing happening, is China being the place to be at the moment for bonds. People are buying Chinese bond, at least somebody's buying Chinese bonds. And if you compare Chinese bonds here and American bonds right there, which we're more likely to look at the BND if you prefer to compare all things equally. They are both priced in US dollars. There's no currency difference. You can see that for real, the price difference is completely obvious. While Chinese bonds are going up, American bonds are going down, which is something that you must be very well aware of, because if you want to put your money, you might as well want to buy things that have their price that appreciate. And the rates for Chinese bonds are 3%, which is a pretty nice rate, still not beating inflation over the short term, but it's still a very nice place to put your money if you want to buy bonds. And if you like China, I don't know, I'm just talking about what I see in the markets. Something else, European stock market, American stock market, Asian stock markets are correcting from their 2020 boom. You had the beautiful 2020 bull market right there, and now we're starting to enter in a very toppy pattern, and maybe we're going to see some kind of correction. Will it be deep? Will it be very subtle? I don't know. I'm not a predictor. I'm just acting about what I do. So, which means that if the indexes and stock markets are going down, you clearly see that with the small and medium companies in France that are not looking bullish, that are looking bearish. You don't go hard into small and medium companies. That makes no sense. You don't go hard buying into a market that is selling. That makes no sense. Even if you find the greatest companies of all time, the odds are just not with you. So I'm waiting for the market to flip. Maybe we will see a bear market for the next year. The markets are going to flush out the bad money, make a bottom, and then there is going to be new opportunities that we'll see on the screeners. But right now, I'm staying out, and there are only a very few companies that I'm looking at, but I'm building very small positions. And I'm not going hard because there's, again, I repeat this, the odds are not with me here. Again, just to talk about cryptos, real quick, it's not interesting. It's a range. It's boring. There's nothing's happening. There is no opportunity. Nobody's buying crypto. Nobody's touching it. So yeah, I don't know why you would. Somebody commented they want me to talk about this. There's nothing to talk about. So I don't know what to say. Maybe it's trying to build a local bottom right there. Who cares? You don't anticipate patterns. You trade them. Even if it's making a breakout above, it's not a trading pattern for me. Yeah, crypto has gone up like never seen before since the COVID crash. So it needs to consolidate, it needs to flush out the bad money. Look at what's happened to Dogecoin, for example. Completely healthy correction. That is still crazy up. If you remove the log chart, of course it's looking like it's corrected a lot. But if you look at things like this, it still has a lot of room to go down. So yeah, crypto is very boring. The last thing I wanted to mention that I'm looking at, and maybe I'm forgetting about things. If you trade something else, if you have other trading ideas, please don't hesitate mentioning them in the comments. I'll be very happy. And we're there on Financial Twitter and on Financial YouTube to share our ideas. With what's happening in Ukraine and Russia, if you have no problem with morals, because I, as a French person, French people have a lot of morals about money, and there is a very taboo about geopolitical trading. I am looking at Russian ruble and US dollar. If you believe that there are going to be troubles with Russia and the United States, that money is going to leave Russia, as we're seeing right now, you might as well check the Russian ruble US dollar exchange rate and try to maybe speculate around this. What you could do is short the Russian ruble if things start to go really bad, just like what happened in 14 when there was the Crimea War. The shorting the Russian ruble was a very, very, very smart thing to do, because capitals were getting out of Russia in fear of the huge economic sanctions that happened to Russia. And the same thing might happen if something bad happens in Russia and in Ukraine. I'm presenting this to you. You make your own choice. I'm not telling you what to do. I don't know what will I do. I'm still thinking about it. I'm still thinking if I should make money on a war. It's a very difficult thing that I think about, but I'm not here to talk about morals. I'm here to talk about money. So that's it. That's the only thing I was the last thing I wanted to talk about. Just to give you an idea of what I own right now, I own a few stocks that the American stocks are closed today, and you can see that nothing's happening. I have this lithium stock that is still hovering around and that I'm paying attention, that this consolidation pattern will result in a new downtrend. For example, if we start a breakdown right there, I'm going to sell my position. And if we don't do anything, I'm staying in. So yeah, I'm also paying attention to the corn ETF to add to my corn position. I don't know why people buy corn. What I just care about is the price moving up. And if we break this pattern, I'm going to buy more corn. That's it. Yeah, I'm done from trading Bitcoin. I trade corn right now. That's a very smart thing to do in the period of agricultural commodities bull market. That's it. Thank you for watching this week video. If you watched till the end, thank you very much. There's nothing really interesting, not that much trades going on. I don't really talk about money I make. I talk more about what's happening in the markets without acting on it, because there is a time to act and time not to act. Thank you for watching this video. Goodbye. Have a nice week.